Can I use a 203K loan to flip a house? By the end of this video, you're going to learn when a 203K loan works and also what some alternative ways to fund your flip is, and I think even better. Have you heard about an FHA 203K loan for flipping and funding a house and you're wondering, should I do this? It sounds like a perfect scenario, doesn't it? You buy a house, you get this money out to buy the house and fund the renovation. It seems like a perfect thing. But is it actually good for flipping? In this video, I'm going to explain exactly what a 203K loan is and why it might not be the best option for you as a house flipper. 203K loans are government-backed loans that are designed to help homeowners that want to rehab a house. They're not really designed for flippers for a variety of reasons. I know plenty of people have tried to use them to flip a house, but if you're going to be a serious house flipper, you want to move through a house fast. Now, 203K loan is a government-backed loan. As you can imagine, governments have what? Red tape, and a lot of it. They seem to have endless amounts of red tape, don't they? So that means that they're going to stretch this out. As a house flipper, time is money. And you can learn that in a lot of our videos on our channel, so make sure you check that out. But I want you to understand that 203K loans are designed mostly for people that are homeowners that want to flip more of a long term. It's really a good program if you're someone that wants to live in the slow flip world and live in the houses that you flip. There's plenty of people that will buy a house, take a year to fix it up, use a program like a 203K loan, and then after a year or 2 or 3 years or 5 years, sell that house and then go out and find another house and do it all over again. And certainly that is a good way to do that if that's the kind of house flipper that you want to be. There's pros and there's cons. One of the pros is it'll typically be lower interest rates than going with a hard money loan or going with a private lender or other ways that you can fund a traditional flip. The other pro is the rehab funds are included. As you may or may not know, when you go to a traditional bank and say, I want to borrow money to buy this house, they'll give you the lion's share of the money to buy the house, provided you're credit qualified, but they will not give you any money towards the rehab costs of that house. That is usually risky for a bank to do. So a 203K loan gives you both the purchase price and the renovation costs combined. The tricky part is it's given to you in draws, meaning that you have to get the work done first, then it gets inspected and approved, and then a check is issued to you. So you have to come up with the cash up front before the government will reimburse you for that renovation. Just not quite as easy as it sounds when you first get started. The cons are, like I mentioned before, there are strict rules behind it. It has to be an owner-occupied property, and there's a longer closing requirement on this. Now here's a big con. There's a cap to the amount of renovations you can do to the property. It is now $75,000 as the maximum you can put into a renovation on a property, which can go pretty far, but in some areas in today's world, it doesn't go that far at all. Did you know that amount was $35,000 in November of 2024? So it was just increased to the $75,000. The standard 203K program has loan limits. It is tied to the median house price of your area. So not every house qualifies. It really depends on what the federal government decides is the median house price in your area and what they're willing to give you for that property. So remember, not every house you find is going to qualify. The good news is they do review and update these amounts annually. Now the total loan amount, meaning the purchase price plus the renovation costs, those together must fall within the FHA guidelines for the amount that's allowed to be loaned in your specific area, again, based on the median house price. So make sure you're talking to a qualified professional that understands all these ins and outs so you don't get your hopes up on a house that doesn't qualify at all. Now, if you really want to be a real estate investor, there's a lot better options. You can use hard money, where you borrow money from institutions that are designed to loan money to home flippers on short-term notes. Yes, they cost more in interest, but if you're positioned to make a $50,000, $75,000, or $100,000 or more profit on a property, and you have to pay somebody 12% on the money, at the end of the day, if you focus on the profit you make instead of the cost of the money, you can still make a significant profit. You should do that deal all day long. You can also partner with other people as well. Use their money. They can take a piece of ownership in the property. You can also do what's called seller financing or other ways that we teach on ways that you can do creative finance to buy a piece of property. By all means, check out our channel to find all the different videos we have on different ways to fund properties. And our favorite one to use is private lenders or private money to fund your flips. That's just simply everyday individuals that have money sitting around in a 401k, in an IRA, or in a checking or savings account, and they can fund your deals. You can pay them 10 or 12% return on their money, and you can use their money to flip a house. As a matter of fact, that's how Amber and I got started in our business. In 2008, we had a huge financial crisis in America. It was brought on by fraudulent lending by banks in the real estate sector. You might remember that. Well, that's when Amber and I got started flipping houses. Matter of fact, we had flipped our first 2 houses using a bank loan. We had figured out how to make that work. And then suddenly, the carpet was pulled off from underneath us and there was no more bank loans being given. Well, here was the problem. Amber and I had 2 houses that were actually under contract to purchase and flip at that time. And we were halfway down the closing cycle when the banks called and said, we're not going to give funding anymore. And we had to figure out how to survive. And like a good entrepreneur, I went to work and didn't say, well, this deal's dead, I can't do this. Instead, I said, how can we get this done? And I went down the path of searching how to look up private lenders. And we found one of our close friends. It was actually Amber's close friend at the time. She worked out with a woman at the gym. And she said, boy, I'd love to be an investor for you guys. I said, do you have any money? She said, no. And I said, well, that kind of sucks. And then a couple days went by and I called her back and said, you know, I have a question for you. You guys have a beautiful home. You did a lot of work on that home yourself. You're always doing stuff around the house and it's a beautiful home. It's got to be worth $500,000. She says, oh yeah. She goes, yeah, we have a lot of equity. I said, do you have a home equity line of credit? She said, we do. I said, what if you used your home equity and I paid your monthly payment and you funded our deals? We need $100,000 to buy these houses and do the renovation. And she said, you'd pay my payment? Yeah. And so we did that and paid her a 14% return on the money. She was making money on money that wasn't even her money in the first place, but she became our very first private lender. And you know, since that day, we've raised well over $5 or even $6 million in private lender funds that we use to this day to fund our real estate investing business. We're a big believer in not using our own money or government money or bank money, but using other people's money to fund our real estate investment deals. So there's a lot of ways to get your deal done out there. Yes, 203K is one of them, but it's a government program with lots of regulations, and I think your hands are tied more than they're free. I would encourage you to, again, spend time on our channel and find other ways you can fund your real estate investing deal that you'll find to be much more lucrative and allow you the speed you need to make as much money as you possibly can as a flipper. So a 203K loan, it might really sound good. As a real estate investor, you need a different playbook. In the next video, I'm going to show you exactly how we evaluate flip deals. From looking at the rehab costs, again, the repair costs, what's the ARV, what's it worth when I'm going to be done, and more importantly, how much should I pay for the house so I can guarantee myself a sizable profit in my pocket. This system is one that we still use today, doing over 100 flips a year. We have put literal blood, sweat, and tears into this system that I know works from the bottom of my heart, and I'm going to give you the education for it in the next video for free. Do me a favor. If the video is not right here, the link is in the description below. Click it, check it out. It's my gift to you.